Welcome to the monthly finance update with Johnston Grocke. I'm here with Lisa Redmond and Richard Allen and myself, Rhiannon, to give you an update on everything finance this month. I'm going to cross to Lisa, who's a financial planner here, to give us an update on what's going on in her world.
Thank you, Rhiannon. Well, what an interesting time that we're living in at the moment. Just in the last month, since our last market update, we've seen the Australian share market follow after the other global markets, a bit of a downturn after we had seen a bit of a rally. The Australian IT sector was hit particularly hard, but there is positive news that some of the Australian property securities did have a bit of a rally in their value. So the focus now is shifting to the uncertain economic path to recovery and the ongoing public health issues due to the pandemic, particularly as we continue to see high infection rates posted in the US and several European countries. So we're expecting to see continued volatility in the markets, particularly in the US, with uncertainty around any new economic stimulus coming out of there and the upcoming presidential election. So here in Australia, the RBA has announced that unemployment is their highest priority, and they aim to keep interest rates at the record lows of 0.25%. However, many in the market speculate that those rates could drop as low as 0.1%. So on the back of that, here at Johnston Grocke, we would recommend that investors use caution, because as those rates get lower and lower and returns on fixed interest and cash investments drop, some people may be tempted to chase returns in other asset classes. We just need to bear in mind that those asset classes also carry a higher level of risk with them. So we would recommend that any investing in the share markets is done in stages and done in collaboration with your advisor based on your specific needs, and those could be your life stage. So are you needing to draw an income from those investments? Are you still in the accumulation stage? How long are you going to be invested for? So how long until you need to access those investments? What are the goals and objectives that you're trying to achieve by having those investments? And of course, what's your risk profile? So how much risk are you willing to take on to earn a return? And lastly, just a quick note on the budget. So for those people that are currently receiving a Centrelink income support payment, they will see another $250 hit their bank in November, and then another one in early 2021. There has also been some proposed changes to superannuation, so trying to eliminate people that are collecting superannuation funds when they change employers, and also to prevent people from joining funds that are underperforming.
Great, thank you, Lisa. That was great coverage. Thank you. Over to Richard Allen. He's an accountant here at Johnston Grocke. What have you got to tell us, Richard?
Thanks, Rhiannon. The two main things to cover off today is JobKeeper 2 or 2.1 or 3, which one we want to call it, and the federal budget. First with JobKeeper, the rules have changed on that now, so you need to compare the last quarter that we've just had, July to September, to the same quarter of last year, and go through a few tests there. It's a lot stricter and a lot more complex than what the original JobKeeper was. So if you're having troubles with it, please get in contact with one of our team and we'll help you out with it. But we are finding that a lot of our clients who qualified for it originally don't qualify for it now because they've made some type of recovery, not quite back to full turnover, but a lot better than what it was back in March, April, May, June. Onto the federal budget, there's lots of highlights in this one. The main thing to remember with this is at the moment it's not passed through law yet, but the opposition has said that they're unlikely to oppose anything. So what the federal government has announced will likely to become law at some stage soon. The biggest thing that most people will be interested in is the new personal tax rates. Everybody will be receiving a lower amount of tax taken out of their pay, and that'll be backdated to the 1st of July, so that's good news for everyone. You can go online and find out what your rates will be, or give one of us a call. I have a question there.
Yes. When will we get that back, Richard?
Well, they haven't. They're still working on that at the moment and changing the PAYG withholding tables and all of that. But it'll be very soon.
Excellent, thank you. Sorry, continue.
And there'll be some options there of whether you get it backdated, whether you take it a lump sum. It will affect your total tax taken out for the year, so there'll be some options, but payroll will let everybody everybody know about that pretty
Oh,
soon. I would
great.
hope.
Okay, thank you.
No worries. The other main one first, there's a lot of incentives there for small businesses, small to medium businesses, which is what we focus on here at Johnston Grocke. That's the bulk. In fact, all of our clients are small and medium businesses. The main one is the instant asset write-off. That's been extended to 30th of June 2022. The threshold for the small business now to access that is 5 billion. So I reckon that covers just about everyone. And there used to be, up until now, there was a threshold of 150,000 for the asset. It's now no threshold. So basically whatever asset. Some assets, there is an eligibility criteria for that type of assets you're going to buy. So please contact us if you're not sure on what you can and can't get. The small business threshold has increased from 10 million to 50 million. This now gives more small business access to lots of the tax concessions that are out there. There's some FBT exemptions for small businesses, ranging from mobile phones to laptops to car parking. That's all changed. Again, Google it. If you can't find what you need, contact us. There's some simplified stock rules, which is good for the end of financial year. Rebates and packages for training new employees and for apprentices. So that's another win. Some prepayments that we used to claim in the past and have to write off over 3 to 5 years are now immediately deductible, so that's another win. Companies that are going to have a tax loss in 2020, 21 or 22 can write back that loss to a profit they made in 2019, and if they pay tax then can receive a credit for it. Again, those details are really complex, so we'll be aware of that when we prepare your returns for this financial year, 2020 and 2021, so we'll work out what you can get there. There's a lot of R&D incentives, so for some of our clients who are into research and development, more incentives there. And finally, there's JobMaker, which will be a credit for businesses that are going to employing people from 15 to 35 and different rates. Again, contact us and we'll give you the full details. A lot of detail there, but a lot of contact us to fill you in on what needs to be done.
Yeah, that was actually really informative.
It's quite a comprehensive budget, but really focused on trying to get people working again and supporting small to medium businesses, which is, as we know, the backbone of employment in the country and the state.
That's great. Did you watch the budget live, Richard?
I don't tend to. I tend to read it as it comes out.
Okay.
I watched the
I feel
offset
like
at the beginning and then
watched it
read
live.
it that night. Yeah, no. I'm an accountant, but I'm not that bored.
Oh, awesome. Well, thanks, guys. So over to me to fill you in on what's happening in the mortgage and finance world. Banks are really slow still, so please remember that if you are applying for finance, extend the finance clause, extend the settlement date, because they're just super busy at the moment. Rates, we're looking at a 2.19% variable rate for owner-occupied and a 3-year fixed of 1.99, so really, really low rates. And with what the RBA have said, they may drop even further, which beggars belief, but looks like it may happen. We still don't have a lot of stock on the market at the moment in the way of houses, so there's still a lot of competition for homes, so especially here in Adelaide we're seeing house prices go up and houses go for a lot more than what they probably normally would in this market. We're still seeing the effects of COVID with the banks and what they're asking for from their clients. So casual employment isn't accepted with still quite a few lenders. If you're self-employed, they haven't normally required it, but now they may require your latest BAS or your trading accounts for your business, along with your last 2-year tax returns. Some banks require your workplace to send them an email, like with the letterhead and everything, to say that they're still employed there within 7 days of finance, or you may have to sign something to declare that you haven't been affected by COVID in any way. Also, the government came out saying that the conservative nature of the banks, the pendulum swung a bit too far, and they're looking to loosen credit policy because the more that we borrow, it stimulates the economy, and at the moment it's quite hard, so they're looking to loosen that and allow more people to be able to borrow. That hasn't come into effect yet. We think maybe March if it's going to go ahead, which will be really exciting because it's going to allow a lot of people who can't borrow right now the ability to borrow and buy a house. If you've got any questions about anything we've spoken about today, please contact us. Thanks very much.